For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has rapidly risen to prominence in the world of artificial intelligence, becoming a focal point for investors and market analysts alike. Its strong performance has not gone unnoticed, especially as the company has firmly positioned itself at the center of the AI revolution. What sets Palantir apart from the competition is its innovative artificial intelligence platform, which fuses the computational strength of large language models with its already well-established data analytics infrastructure. Core systems like Gotham and Foundry provide the foundation for this integration, enabling Palantir to offer advanced, scalable solutions for both government and commercial clients. As artificial intelligence has become increasingly relevant across industries, demand for Palantir's products and services has grown at a remarkable pace. This upward trend in interest has translated directly into the company's financial performance. Notably, Palantir has now achieved revenue growth acceleration for 7 straight quarters. During the most recent quarter, revenue rose by 39%. This consistent improvement underscores the expanding market need for AI-based platforms that can handle complex datasets and provide real-time insights. Alongside revenue growth, Palantir has also experienced a significant improvement in profitability. In the first quarter of the calendar year, the company's operating income surged by 118%, reaching $176 million. This growth in operating income was largely driven by an expanding operating margin, reflecting the company's ability to scale efficiently and control costs while growing revenue. Adding to the momentum is the company's charismatic and outspoken Chief Executive Officer, Alex Karp, who has never been shy about expressing bold visions for Palantir's future. In the company's most recent earnings communication, he emphasized the magnitude of Palantir's progress, stating that the level of rapid and aggressive growth the company is currently experiencing would be considered extraordinary for an organization 1/10 the size of Palantir. He added that given its current scale, Palantir's trajectory is virtually without precedent. Such strong statements have helped to build a compelling narrative around the company's capabilities and future. That narrative has captured the imagination of investors, driving significant gains in Palantir's share price. Over the past 24 months, the stock has appreciated by more than 900%. This dramatic increase has elevated Palantir's status in the software industry, making it the most valuable software company focused solely on this sector. With a market capitalization now sitting at $291 billion, Palantir has moved ahead of other major names in the industry, including Salesforce, which holds a market value of $262 billion. However, this remarkable ascent has also brought attention to the company's valuation, which has entered territory that many would consider extreme. Palantir's current price-to-sales ratio stands at 98. To put that into perspective, even a figure 1/4 that size would be considered expensive in traditional market terms. This lofty valuation raises questions for value-conscious investors who admire Palantir's success in artificial intelligence, but are reluctant to pay such a high premium. For those seeking a more attractively priced alternative within the AI-driven software space, one company that has recently emerged as a compelling option is Intuit. Known for its powerful and widely adopted software products such as TurboTax and QuickBooks, Intuit serves a broad base of individual consumers and small to medium-sized enterprises. These customer segments are particularly well-suited for artificial intelligence solutions, as AI can streamline time-consuming tasks such as tax filing, accounting, and financial planning. In its most recent fiscal third quarter, typically the most important quarter of the year due to tax season, Intuit demonstrated just how effectively it is harnessing artificial intelligence to enhance its product offerings. Chief Executive Officer Sasan Goodarzi made it clear in the company's earnings report that Intuit is aiming to redefine what is possible with artificial intelligence. He described the company's ambition to evolve into a comprehensive hub of AI-driven agents and AI-supported human experts who can help drive the success of both consumers and businesses. One of the most notable examples of this technological transformation can be found in TurboTax. The software now includes an enhanced capability called Data In, which automatically imports tax data for customers. This automation covered 90% of the most commonly used tax documents among TurboTax users, up significantly from 68% in the prior year. This improvement highlights how artificial intelligence is reducing the burden of data entry and increasing accuracy for customers. AI also played a key role in assisting the human experts behind TurboTax, dramatically reducing the time required to complete tax returns. In the QuickBooks segment, Intuit is preparing to roll out a comprehensive suite of artificial intelligence agents. These tools will span across critical functions such as customer engagement, payment processing, financial forecasting, project coordination, coordination, and bookkeeping. Despite ongoing macroeconomic uncertainty, these enhancements are helping the company maintain strong momentum, and leadership remains confident in its ability to continue expanding profit margins. Financial performance in the fiscal third quarter further reinforces Intuit's strategic positioning. Revenue climbed by 15% to reach $7.8 billion, while adjusted earnings per share rose by 18% to $11.65. Following this robust performance, Intuit raised its full-year guidance, now expecting revenue to grow by 15% and adjusted earnings per share to increase by between 18% and 19%, coming in at a range of $20.07 to $20.12. When evaluated based on this updated forecast, Intuit stock is trading at a price-to-earnings ratio of 36. This valuation is approximately 60% lower than Palantir's price-to-sales ratio and only modestly higher than the average ratio for companies within the Standard & Poor's 500 index. This makes Intuit an appealing option for investors who are drawn to the potential of artificial intelligence but are looking for opportunities that offer a better balance between growth and valuation. Adding to its appeal is Intuit's ecosystem of software solutions. Both TurboTax and QuickBooks have strong customer retention characteristics. Another rapidly growing segment within Intuit is Credit Karma, which saw a 31% increase in revenue during the third quarter. This prompted management to revise its full-year revenue growth outlook for Credit Karma, raising it from an initial range of 5% to 8% up to a much more optimistic 28%. This steep upward revision underscores the rapid acceleration of this business segment. Intuit also reported an impressive operating margin of 48% during the third quarter. Looking ahead, the company is expected to maintain high margins as a result of its subscription-based business model. Since the marginal cost of serving additional customers is minimal in software businesses, especially those delivered via cloud infrastructure, Intuit is in a strong position to grow efficiently and profitably. The company's strong momentum was reflected in its stock performance as well. On the most recent Friday, Intuit shares reached an all-time high. Despite the impressive rally, the stock still appears well-positioned for continued growth, particularly as artificial intelligence becomes increasingly central to its strategic roadmap. With its robust lineup of AI-enhanced products, commitment to innovation, and scalable business model, Intuit is shaping up to be one of the most compelling opportunities in the artificial intelligence-driven software landscape. In the end, Palantir Technologies has emerged as a top performer in the artificial intelligence space, with its advanced AI platform integrating large language models and deep analytics tools like Gotham and Foundry, fueling 7 consecutive quarters of accelerating revenue growth, up 39% in quarter 1 and a 118% surge in operating income to $176 million. Its bold vision, driven by Chief Executive Officer Alex Karp, has propelled the stock over 900% in 2 years, giving it a market value of $291 billion and placing it ahead of other software giants. However, its high price-to-sales ratio of 98 has made investors cautious, leading some to consider alternatives like Intuit. Intuit, which provides TurboTax and QuickBooks, is leveraging artificial intelligence to automate tax data entry, reduce return preparation time, and introduce AI agents for business tasks. The company reported 15% revenue growth to $7.8 billion and an 18% rise in adjusted earnings per share to $11.65 in its fiscal third quarter, while also raising full-year guidance. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.